But your next guest says that despite that, what's going on may have disastrous consequences, and the U.S. is not immune to these global waves of uncertainty. Let's bring in now Greg Daco. He is chief economist at EY Parthenon. Greg, I like to keep Fridays a little bit on the optimistic side, right? Nobody wants to go to the weekend feeling all like the Grim Reaper. That said, and I've sort of been talking about this for months or more than a year now, what's happening in Europe cannot be understated, can it? And there is a contagion risk from Europe to us. Yes or no?
Yes, absolutely. I think we should not think of the U.S. economy as being an island that's isolated from the rest of the world. As you said correctly, what happens in the rest of the world ends up washing on our shores. We are in this very unique environment where what we're seeing is a globally synchronized but uncoordinated tightening of monetary policy around the world. All central banks are really aiming to regain control over inflation. And this tightening that's happening at a very rapid pace will likely have consequences that we don't know yet of. And I think there is a real risk that there could be a more significant and more pronounced tightening of financial conditions, which has more dire effects on economic activity than currently anticipated.
I have been tough on Jay Powell, tough on Janet Yellen, not as human beings, but just in their job. It appears they're not good at that job. In Europe, it's still many of the same, Christine Lagarde, it's like the same names for the last 5 or 10 years. Do you think the market has confidence in these people? Should the market have confidence in these people who were there when things went awry?
Well, I think we're right to be looking at what central banks are doing with a lot of attention, because what central bankers will be doing over the next few months will be key in determining the global outlook and the pace of the slowdown. We are in an environment where a lot of central banks are having to play catch up in terms of monetary policy tightening, but they all seem to be quite credible in their intent to regain control over inflation, even, and I would add, especially if it adds pain in the form of slower economic activity. That's really the goal of most central bankers today, is essentially to curb demand, because as we know, they have very little power in terms of reestablishing supply. So they're really weighing on demand. The question is, how capable are they of managing a soft landing in this environment?
Well, we're going to find out. I want to go outside of that. Obviously, you know what happened with the Nord Stream pipelines this week. Norway's flying fighter jets over some of its oil platforms in the North Sea today. JP Morgan Chase, Marko Kolanovic, they talked about it at halftime, came out with a note. I'm going to summarize it, read one line from it. The destruction of the Nord Stream pipelines this week is an event that significantly increases tail risk and makes it difficult to de-escalate. Many believe the current situation is similar to the Cuban Missile Crisis back in the early 60s. Is that overstating it, Greg?
I think we're certainly living in a world where geopolitical tensions remain extremely elevated, where you're seeing aggravated fragmentation in terms of global powers around the world, and one in which navigating this uncertainty will be increasingly difficult from a business perspective. And I think that as we look into the winter, we're likely to see pretty significant disruptions in terms of energy flows, in terms of output coming from Europe. We know that in Asia, there are also weights on economic activity because of the disruptions to activity in China. So we are in the midst of a highly uncertain and highly susceptible global environment, which will have effects on economic activity in the U.S. So those developments that you just talked about are key and central to developments in the U.S., even if there aren't apparent direct ties between the two.
Yeah, well, there's about 10% of S&P 500 company revenues do come from Europe. Some of those revenues, you got to believe, are at risk. Greg Daco, we appreciate your views. Thank you very much.